All right, let's bring in my dear friends, Art Laffer, former Reagan economist, and Steve Moore, host of More Money, WABC Radio. Gentlemen, hello, hello, hello. So, look, Arthur,
hello.
I don't know. I'm not smart enough to know what quarters, but I'll tell you this. The drop in oil prices, this is the greatest story never told. Economists do not refer to this. You can read the newspapers. They'll talk about the economy and the labor market and this and that. They never mention the economic impact of falling oil prices from roughly $80 a barrel to today's close of $56 a barrel, which is bringing down gasoline prices and hundreds of other prices as well. I'm just saying, Arthur, oil deflation, you're going to get negative CPI prints, and you could, with supply-side tax cuts and deregulation and drill, baby, drill, you could get some 5% quarters. You could get a 7% quarter for all I know. What do you think of that? Nobody's talking about that. Steve Moore's not even talking about it. Steve Moore won't give me credit for it in the hotline. Now Steve Moore's attacking me for some stupid business tax. I mean, it's unbelievable. You know what? Trump knows economics far better than the economists know economics.
Answer to your question. I'm surprised you didn't use it, but when we decontrolled oil under Reagan,
yes,
the price fell from $20 a barrel to $5 a barrel.
No,
That's a 75% decline.
40. So it's 40.
No, I'm talking about real terms. In 1972 dollars, it fell by 75%.
All right.
If we go at the high, which is in 2022, it could fall as low as $25 a barrel, Larry.
Ooh.
That would be an enormous hit. And not only that, Larry, when you switch the immigration going, when you have, instead of having 3 million immigrants coming in here, you have 1.5 million immigrants going out a year, that would reduce the labor force by about 200,000 people per month. So anything that's anywhere near a positive employment and labor force growth is knocking the cover off the ball. We are in such great shape, and I couldn't agree with you more now. 5, 7, 8, 15, 25%, but from 83,
who knows?
From January 1st, 83 to June 84, we grew at 12% or at 8% per annum compound rate for six straight half-year periods.
I mean,
for 18 months we grew at that rate.
You got your supply-side tax cuts with all the incentive. There's a business boom that's already started.
You do.
CapEx, factories.
Yep.
You got your deregulation. You got your drill, baby, drill. Who knew? Drill, baby, drill could end communism in the Western Hemisphere. I mean, it's an unbelievable story. Here, look, computer keyboards, computer monitors. I'm going to read some of it. Eyeglasses, fertilizers for food, golf balls, golf bags, hearing aids, pajamas, pantyhose, pharmaceuticals. I got another page. Rubbing alcohol, shampoo, shaving cream, shoe polish. I mean, it's unbelievable. Not only that, Steve Moore, not only that, Trump has made it cool. Trump, by the way, and Landman, has made it cool to go back to fossil fuels, right? Climate change out the door. Climate change is gone. It's now cool to be part of fossil fuels. We are printing almost 14 million barrels a day. And this Venezuela story, I'm just saying it adds to it. He's using oil, which is their only resource, against them. He's using them, to tighten the grip and make sure that that they play ball with us. Anyway, what do you think? Growth. We're talking tax cuts and growth.
So oil is the master resource, and when the price of oil falls, as you've pointed out many times, Larry, on the show, the price of everything falls because energy is part of everything that is produced, whether it's food, et cetera. So it's a great, great story, and Arthur is exactly right. During the Reagan boom of the 80s, you're right, Arthur, the oil price fell and fell and fell. And the irony, of course, is the whole world was saying in the 70s, we're running out of oil. Right now, the world is awash in oil, Larry, because of technology. Now, a couple of other quick things. You left out things like eggs; they're falling in price. How about airline tickets? They're falling in price. How about motels and hotels falling in price?
Yes,
so we are seeing a real improvement on the inflation story. And
inflation's going to turn negative.
One other data point.
It's going to turn
negative. Because I know
negative.
you're going to love this one, Larry.
The CPI is going to turn negative.
Well, I don't know about that, but I just wanted to get to 2%.
You're
But here's the other part.
negative print. Wait, it's coming. A negative print.
Okay, so let me say one other thing.
Please continue.
I said on your show, I said on your show 2 weeks ago that perception on the economy was going to catch up to reality. And you know what? That's exactly what's happening right now, Larry. Look at those opinion polls. Trump's ratings on the economy are continuing to improve because the reality is this is a supersonic economy right now.
Well, he's selling it. Listen,
Yep.
his speech in in the White House was much better than the lefty pundits said. He did a good job on that speech with numbers. All right, let me ask you some other stuff. Arthur, they put out a circular today. I don't know how complete it is, but big investors like REITs and private equity funds can't buy single-family homes. Is that a solution to housing? I mean, I kind of think that's just a bunch of government meddling. It wasn't an executive order, and he just kind of said it. What do you think of that, Art?
I think you should take Trump very, very seriously, but not literally. If Abu Dhabi said we'd give you $1 trillion to build enough new homes as long as we could own half of them, I think he would agree to do that. You know, when I think of Trump, he is talking there. He wants people to have their own homes. He wants more housing. We need housing to be affordable, and the only way we can make it affordable is to produce more houses. If there are 1 million houses around, 1 million houses are affordable. If there are 100,000 around, only 100,000 are affordable. We need more houses and building it. And what does it take to get there? And it takes people building those houses and having them owned by individuals or rented as individuals, whichever is the best for the individuals.
Arthur, there's another thing we could do. We could, and my friend Jeff Yass and I have a piece that will be in the Wall Street Journal in a couple of days. How about this? Suspend the inflation tax on capital gains. That will allow people in housing, older people like the three of us, to sell our houses if we downsize. You provide a lot of increased supply in the market, and why should people have to pay a tax on their inflationary gains? It's not fair.
I like that. I like that. Speaking of taxes, Steve.
Yeah, I do too. I like it very much.
Which tax?
Yeah, but in houses, it's much less important, but it's really important. We index capital gains.
Yes, we should index capital gains. Very important. Actually, there's a reconciliation bill coming. We might have some room to put in supply-side tax cuts. Steve,
by the way, it raises money if you do this.
I know.
If you raise this money.
I'm thrilled about it. Let me ask you this: what is the business tax you're referring to? You mean this is IRS compliance? Nuisance taxes, is that what you're saying? I was trying to figure out the article you wrote, but you don't really spell out.
Thank you.
You don't really spell out what it is.
Yeah, okay, so basically in the final days of the Biden administration, the Biden IRS, which was so politicized, they went against business partnerships, a massive tax increase, not legislated by Congress, but put in place by the Biden IRS. Scott Besson, I know you watched this show, Larry Kudlow show. Get rid of that Biden-era regulation because there are millions of partnerships.
Is it a compliance?
Yes, it's an IRS rule put in place by Biden. Deregulate. Get rid of it.
All right. So the last point I'll make is, Arthur, you'll like this, but John Tamny, libertarian, hard money guy in Real Clear Markets, is Steve Moore and Larry Kudlow owe Trump straight talk on the dollar. Okay, so he's blaming us for
I didn't see that.
It's out there. He's blaming us for these. The dollar's a little soft. I don't know if you use the Federal Reserve dollar. All right, go ahead, Steve Moore.
I'm for a strong dollar. I'm not for a weak dollar.
I know. So am I. I agree. I'm for a strong dollar too. Arthur, are you for a strong dollar? Huh?
There you go. John Tamny got to you guys, huh? We want a stable dollar, long share. We want to get rid of inflation. No 2% growth in inflation. Keep it flat for the next century. That's what I'd like to see. Return to a price rule and a monetary standard. No unhinged paper currencies anymore.
I like that. By the way, just remember that you're going to see, I don't know when, there will be monthly CPIs that will be negative. It's coming. Negative prints. It's coming because of oil. Art Laffer, thank you very much. And Steve Moore and your soft dollar policies, thank you very much.